Hi guys, this is Crowd Investing. In today's stock analysis, we're going to look at this stock called DIAGEO. Okay, so this is the reason that why we're looking at this stock. This stock is actually a really good uptrend in the last 20 years, I would say. It only went downtrend in the 2008 economy crisis, and then during the COVID last year, it also dropped a lot, but it recovered very fast. Okay, so let's dive into this stock called DIAGEO. A disclaimer. Okay, so this company DIAGEO, right, is actually a UK company based in United Kingdom, and then it offer the drinks is like the scotch, whiskey, gin, vodka, and then some of the like beer, and then some of the non-alcoholic product. Basically, this company is producing those that alcohol to sell to around the world, and then this is their market. They sell to the North America is about 40% of their revenue is from North America. Euro and Turkey is about 21%. Africa 11%. Latin America about 8%. Asia Pacific about 20%. So from here that we can know this company Diageo is actually selling the alcohol to around the world. So it's really diversified, and we can from here we can see that this company is having a really wide economy mood. Okay, so this is the brand that under this company Diageo. The most famous is Johnny Walker. In the Johnny Walker, they have the blue label, gold label, and then in the beer they have this Guinness, and they also have the Baileys, quite famous alcohol. So they have a lot of the different brands. So I would say that they are very diversified, and then they have some of the Japan's brand also. I think so. Okay, so this is their financial review. Okay, before the COVID, right, before 2020, their financially is actually quite strong, going consistently going out. Then during the COVID, then the whole world is locking down, global is locked down, so they is affected because less people going out. They cannot go to the bar, they cannot go to the club to have the together with their friends to drink the alcohol, so there is a slightly effect. But you can see that in 2021, once the whole world economy is starting to reopen, their revenue is actually starting to catch out again, like almost reach to pre-COVID level. So it's a very good sign that this company is not that really affected by the COVID. Okay, so the net income is also going consistently before that. Then during 2020 drop, when now it's starting to grow back. So we can expect that in the next few years, this company the revenue will be continue to grow. So the cash flow from operation also quite consistent. Then here drop a bit, then here even recover and then higher than the pre-COVID. So it's a very good sign that this company operation is actually generating more and more cash. Okay, so during the debt review, right, the current ratio is about 1.6, which is very good. And then debt to EBITDA is about 3.25, is how do we say, it's a neutral, not that high. Debt servicing ratio is very good. Interest coverage ratio 7.52, okay. Debt to equity 2.19 is slightly high, but not that high. It's still acceptable. So for the this five ratio, right, we can say that overall this company Diageo is the debt is actually acceptable, not that high. Okay, most important, the future growth rate from those website that the average is about 9.75. I take out this guru focus because guru focus is focus 29%, which is too high, is a bit unrealistic. So I take the average of the first four is about 9.75. And then from the historical growth, right, this company is actually considered a very low growth company because the average growth in the historical is only 3.57. So it's considered low, but it's a really wide economy and stable company. I will say that this is the predictable company. So by using the stock actual value calculator, I can get the final intrinsic value is about $169. It's around 170. So with the current price, okay, current price is about 199, which is very overvalued. I would say that if you want to include this in the portfolio, then I will wait. Personally, I'm waiting this stock to come down for quite a long time because I have missed the chance to add in during the COVID crash. So it run very fast, so I unable to catch it. So now I'm waiting for it to come down. So I will expect to buy my first batch is in about here 20 EMA 167, and then I will buy again if the price drop to 153, and then I will all in again if this stock go to 134, which is around this 100 MA support. You can see during the COVID it also dropped to around here, this support, so I can trust that this is a very strong support for me to all in this stock if the price drop to here. So this is all for the today's stock analysis. Thank you very much.